Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the two top growth stocks that could literally 10x your money. So these stocks are not buy recommendations, these are just stocks that I think could be put on your watch list to determine if these are good buying opportunities for you personally, your portfolio, as well as your investment objectives. So I at least at minimum want to put Upstart Holdings, ticker symbol UPST, and Latch, ticker symbol LTCH, on your watch list, and in this video we will go into detail about why this Motley Fool author thinks that both of these stocks could 10x over the long term. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about Upstart Holdings or Latch, and without further ado, let's get right into today's stories. I really like how the author starts off this article by quoting one of my all-time favorite investors, which is Peter Lynch, and he says this, and I quote, "All you need for a lifetime of successful investing is a few big winners, and the pluses from those will overwhelm the minuses from stocks that don't work out," end quote. And basically what Peter Lynch is saying is that you only need a couple good companies that are going to 10x or more in your portfolio, and the gains from those companies are far going to outweigh any of the losses that you've had with the other companies. However, you have to be willing to hold these companies over the long term. And that is why we are looking at two stocks which this author thinks could easily 10x in value. So now let's talk about the details surrounding these companies and what I personally think of these two stocks. So we're going to start off talking about Upstart Holdings, ticker symbol UPST. Right now, the UPST stock currently trades for around $103 per share, while the low-end analyst price target for the company is $75, the average price consensus among professionals is $200, and the high-end bullish price prediction that analysts think that the company could achieve in the next 12 months goes as high as $350 per share. At this time, 11 analysts cover this stock, or at least have initiated coverage about this stock, and 7 of them say that this company is a good buying opportunity right now, while 3 of them say to hold the company, with only 1 of these analysts saying to sell the company. So now let's talk about what this company does and why these various analysts can't agree on whether or not the stock is good or not. So Upstart is a financial technology company, also known as a fintech company, and basically they are trying to make credit more accessible for a multitude of lenders, because right now the traditional lending system revolves around your FICO score, which was created by a company named Fair Isaac, which I am personally invested in. However, I think with the recent innovations from Upstart Holdings that this is going to turn the FICO score system on its head. And the reason for this is that the FICO score system is a score that is calculated from around 20 variables in total. And this gives limited scope to the amount of people that actually have these 20 variables intact, which means that lenders actually won't give a loan to these various people, at least not at a very competitive interest rate. And the reason why the lending institution would do this is because they are too risky according to their FICO score. So as a result, some very credit-worthy borrowers are either excluded or get very bad interest rates, and Upstart wants to change that. If we look over at the UPST stock price, we can see initially the stock price was absolutely on a tear until about right here, and then it absolutely skyrockets, caps out, and then plummets back down due to a plethora of, I'm going to say, macroeconomic factors. But recently the stock price has fallen back down to a price that is very digestible for investors that want to start nibbling at this stock. So right now, I would say anything below $100 would be a pretty competitive price for UPST stock. However, clearly the lower that we can get a stock, the better it's going to pay off for us in the long term. But why is this particular author so bullish on this company, and why does he think that the company can 10x? Well, it's mainly due to their big data and artificial intelligence, which allows lenders to quantify their risk more precisely on various individuals that want a loan. For instance, their platform and proprietary software can capture around 1,500, also known as 1,500 data points per applicant. And it also compares those various data points against 21.6 million repayment events that they have already processed. And Upstart actually has data to back up that this is much more effective than the traditional FICO score system. For instance, internal studies have shown that Upstart's big data and artificial intelligence platform can actually approve around 173% more borrowers while keeping their loss rate or default rate constant. And that means that lenders can give out more loans, which makes the lender more money, while also giving credit where credit is due for borrowers that are clearly qualified to take on this debt. And this is one of the reasons why the author says that the company is growing like wildfire. And I personally think if they can really usurp the traditional FICO score system, they could literally be the next Fair Isaac. And right now, the Fair Isaac stock is absolutely phenomenal. I have had fantastic gains brought to me, and if Upstart can actually innovate on this already very good technology and scoring system, I think we should really be paying attention to this stock. Now, do I think the stock can 10x? Honestly, I am not sure. It's really difficult to extrapolate a growth rate as far as 10 years out to determine if the company could literally 10x or grow by around 1,000% from now until then. Which is why I personally am going to base this off of their revenue, free cash flow, and their total addressable market. I do think Upstart is a very good company, but we also have to remember that this is a relatively new company and there is a multitude of various competitors in the fintech space. So now let's start talking about the company's financials as well as their overall fundamentals. For instance, in 2021, the number of bank partners that are using Upstart's technology literally tripled, and this caused their overall volume to surge by around 241% to $11.8 billion. This was reflected very positively on their revenues because their revenue skyrocketed by around 264%, all the way up to around $849 million last year. They also generated very good free cash flow, or FCF, of around $153 million, which is a 15 times increase from the free cash flow that they brought in back in 2020, because at that time the free cash flows only came in at around $10 million. So this is very good to see for the overall company. Upstart also currently works in personal and auto loans. However, they want to expand and further diversify themselves into mortgages and small business loans. So to put this into perspective, currently the total addressable market for Upstart just from utilizing their personal and auto loans is about $820 billion. So clearly the company has a lot of competition, but they also have a huge addressable market, which means there's plenty of pie and cake to go around for everyone. However, if they start to expand into other spaces, such as mortgages and small business loans, this would add more than $5 trillion to their addressable market. So we're looking at a total addressable market of around $5.82 trillion. And as of right now, Upstart has captured less than 2% of its current addressable market. And because right now the market cap of the business is only around $8.5 billion, it's going to continue to grow very quickly over the long term, which is why this author thinks that the company is justified and could potentially 10x in price. Now, I do want to give a slight bearish argument at the end, so it's not all rainbows and sunshine, and that is that the competition in the lending space is absolutely insane. However, I really do like Upstart's technology and their plan to usurp the current FICO scoring system, which I think is honestly going to be better for everyone involved. Now let's talk about a small cap company, which is Latch. And Latch basically specializes in smart building technologies. They make buildings smart, and their most notable product is a door-mounted smart lock, but they also offer things like intercoms and delivery assistance, which is all powered by their proprietary OS operating system called Latch OS. This allows tenants in apartment buildings to unlock doors electronically or lock them. They can admit guests into their abode, and this technology can also connect to smart home devices, all from a single convenient mobile app. However, unlike Upstart, we see a giant downtrend in this stock, which either means that it's a fantastic buying opportunity right now because it's trading at a discount, or it means that this stock price is going to continue to fall until investors start to see value in this overall company. And while I personally cannot predict the next stock movement of this particular company, we can look at the fundamentals, financials, and the details surrounding this company to determine if it's going to be a very good long-term buying opportunity. I also want to mention that this company is very competitive in their particular smart building experience space, because their rivals only address a very small portion of the smart building experience, while Latch provides a more comprehensive smart building experience due to their integration and offerings of hardware, software, and even services that their clients need. I am also going to give the competitive edge to Latch compared to their other competitors because there is strong demand for Latch's technology. For instance, today 3 in 10, according to the article, 3 in 10 new apartments in the United States are going to be equipped with Latch technology, and this is absolutely huge. Current apartment buildings are being redone and retrofitted with Latch technology, so it's not only new apartment buildings that are receiving these upgrades, but also existing apartment buildings, which is fantastic. This has caused Latch's revenue to skyrocket by around 129% to around $41.4 million as of 2021, and their total bookings jumped around 118% to $360.2 million, which implies very strong demand and a future growth. Latch is still an unprofitable company on a GAAP basis, and they have generated negative free cash flows of around $115 million last year. However, they do have a decently strong balance sheet for a small cap company because they have around $284 million worth of cash and or cash equivalents on their balance sheet, and they plan to achieve free positive cash flows by 2023. So Latch has plenty of room to grow its overall business, and it has a good addressable market because as of right now, there's around 32 million units that are yet to have Latch's technology implemented onto them, which is a lot because right now they're booked for only roughly 590,000 apartment units. So clearly their total addressable market is a very large portion, and I think that the company could grow over the long term. Also, right now, just like Upstart, Latch is only acquiring around 2% of its total addressable market right now. So if it can receive a larger slice of the pie, it could absolutely explode. Right now, the market cap for this company is around $630 million, which is another reason why this author thinks that the company could literally grow by 10x over the next couple of years. However, I would love to hear your thoughts down below. Comment your thoughts about Upstart and Latch. Smash that like button on this video right now for more videos like this one on stocks that could literally 10x your money according to these authors. Subscribe if you are new, and I'll see you in the next YT video.